Welcome to today's SDV Video Insight. My name is Jeffrey Vita and I'm joined by my partner Michael Pepe.
Today we're going to talk about complex construction projects and the types of insurance coverage that might be triggered.
First party, third party, builder's risk, professional liability, wrap-ups, additional insured status. These are all potential sources of insurance coverage for a large construction loss. But knowing where to turn first and how these coverages intersect can be confusing. It is critical for construction industry players, from owners and developers to general contractors and their subcontractors, to have a functional knowledge of the different types of insurance coverage available to them and how these coverages may respond to a loss. Today, we're hoping to identify the various types of coverage available to contractors, construction managers, and owners in a large construction loss. We'll discuss each type of coverage available and the risks each is designed to insure. Michael, why don't you start by telling us about the differences between first-party and third-party coverages?
Sure. In general, there's two forms of coverage. There's first-party coverage that protects an insured's own losses on a project as it's being built, and there's third-party liability coverage. That insures the project participants for losses that become the subject of claims or suits brought against them by third parties. So the key difference is this. Third party is liability coverage. It requires someone to sue someone else, and it provides the party being sued with the defense from the lawsuit, and then it will pay any damages awarded or settled. When a loss occurs on a complex construction project, both types of coverage can be implicated. So let's dive a little deeper. Jeff, what types of first party coverage are available on a construction claim?
First, builder's risk is the first place to look. Builder's risk is a form of commercial property policy that provides coverage for direct physical loss to the construction project while it is undergoing construction. This includes coverage for the insured's own property, the building that is being constructed, along with any materials and fixtures to be incorporated into the finished project. Coverage exists only during the course of the project. Generally, builder's risk policies are written on either an all risk, often referred to as special form policies, or a named peril basis. All risk policies provide the broadest coverage. Builder's risk insurance policies vary widely. Most carriers write builder's risk policies on their own proprietary form. Pay attention to who is insured and who purchased the builder's risk coverage. Michael, what other first-party insurance may come into play?
And so another thing that you want to think about, and not all projects have this, is subcontractor default insurance, or SDI. That's a first-party coverage that indemnifies an insured contractor for losses resulting from the subcontractor's default. The coverage is very broad. It insures the cost of completing the work, the cost of correcting defective and non-conforming work. It also insures legal and other professional expenses, investigative expenses, adjustment, litigation, and defense of disputes. So if there is a contractor who is at fault for the damage, consider SDI. It should be part of your inquiry and thinking about whether there was SDI on the project. There may be other first-party policies in play as well. Equipment breakdown, commercial property, equipment floaters, but let's turn our attention now to third-party coverage. Jeff, when we're talking about liability, where should we start?
You have to start with commercial general liability insurance. GL insurance is the most common form of third-party liability insurance purchased by businesses, including those operating in the construction industry. CGL policies are largely a standardized product written on a form drafted and periodically revised by ISO. The standard policy form provides coverage for damages because of bodily injury or property damage caused by an occurrence. Whether a construction defect qualifies as an occurrence varies by jurisdiction. CGL insurers have two key duties to their insureds in the event of a covered loss: the duty to defend and the duty to indemnify. The insurer's duty to defend means that it will retain an attorney on the insured's behalf when the insured is made party to a lawsuit or a claim. This is typically provided outside of the policy's limits of liability. Most jurisdictions recognize that the duty is very broad and is triggered whenever a claim is alleged against the insured that has the potential to invoke coverage under the policy, including those claims which may appear groundless, fraudulent, or false. The insurer's duty to indemnify is typically triggered by entry of a final judgment, settlement, or other means of final resolution based on the facts found. Parties to construction contracts also may shift their risk by requiring additional insured status on another party's GL insurance. An upstream party, for example an owner or general contractor or CM, will require in its subcontracts that all downstream parties, for example subcontractors and suppliers, add them as an additional insured on their GL insurance. The additional insured is typically entitled to all of the same coverages under the GL policy as the named insured. By shifting risk from the upstream party's insurance to the downstream party's insurance, the upstream party protects its own insurance program. Its limits are not exhausted, and the loss does not count against the loss or claim history of the upstream party. In the case of a loss, you need to consider not only each party's policies, but which other parties may have policies that provide insurance for you.
So now let's talk about excess, liability, and umbrella coverage. Excess and umbrella insurance policies provide coverage over and above the insured's primary insurance. They respond only once the primary policy or policies have paid their limits of insurance, that they've been exhausted. Excess insurance applies only after a set amount of primary insurance exhausts, and generally it provides the same coverage as the underlying policy. Umbrella insurance is a type of excess insurance, and it provides potentially broader coverage than what's provided on the underlying. That means it provides not only an additional layer of insurance, but also additional insurance for things that might not be covered. One way that this is done on construction projects is with a wrap-up insurance policy. Jeff, can you tell us about wrap-ups?
Sure, let's talk about wrap-ups. It has become increasingly common for contractors and owners to purchase some form of consolidated or wrap-up insurance policy covering the project and all or some of the project participants. Wrap-ups consolidate what would otherwise be multiple policies held by the owner, general contractor / construction manager, and subcontractors into a single unified insurance program. All project participants performing on-site work, with a few notable exceptions, are typically included as insureds on the wrap-up policies and have equal rights to coverage under those policies. Wrap-up policies provide many advantages, including better coverage terms than any one party could obtain on its own. They also provide confidence that the subcontractors have quality coverage. Not to mention they provide confidence that coverage will remain in place for the duration of the policy and hopefully for a sufficient period of time post-construction. Let's shift our discussion now to professional liability insurance.
Okay, professional liability insurance. It's another type of third-party liability coverage, and it's particularly important on a construction project for those participants who will be performing some form of either design or engineering services. Most CGL policies specifically exclude losses arising out of the rendering or failure to render professional services. Professional liability insurance is intended to dovetail with that exclusion and provides broad coverage for any kind of act or service that arises out of specialized knowledge, skill, or labor that's predominantly intellectual. And that can include construction management. It doesn't just mean architects or engineers, but construction managers and any subcontractor that might be performing these types of services. Things like HVAC design or electrical engineering are good examples. Jeff, what other types of coverage do we have on a project?
Well, other lines of coverage that may be implicated in a large construction project include, for example, pollution liability that protects against injury or damage caused by pollution, which is generally excluded under your CGL policies. Pollution liability policies can provide coverage for both first-party and third-party losses. Pollution liability policies are often claims-made policies, meaning that coverage expires when the project is completed. However, insureds can often purchase a tail to provide continued coverage after project completion. Another type of coverage that you should pay attention to is rip and tear, which is third-party coverage insuring contractors from costs to remove and replace defective work. Workers' compensation policies, of course, which is a type of first-party insurance that protects an insured's injured workers and limits the insured's liability for tort claims or bodily injury claims. Crisis management is notable. It's first-party coverage that protects contractors for professional responsibility and response costs in a publicized event. Increasingly, contractors are concerned about cyber risk. Cyber risk provides first-party coverage for business interruption and costs due to a cyber attack or a data loss event, and third-party coverage for claims made as a result. To review, Michael, we've identified builder's risk, subcontractor default coverage as potential sources of first-party recovery. Then we discussed the liability policies that come into play when claims are made. These include general liability, excess umbrella, professional liability, pollution liability, and cyber. We also briefly discussed the difference between traditional insurance and a wrap-up for an insurance project. It's important to fully evaluate all potential targets of insurance coverage early so that you can put all carriers on notice and develop a comprehensive coverage strategy.
Thank you for joining us today. For more video insights and insurance coverage content, head over to our website at sdvlaw.com and sign up for our email list. Thanks again.